Paul Lascelles has taken the CEO reins again. Paul is well known for leading Western Copper and Gold for over a decade. This month, Bravada Gold announced that Paul would become CEO. Bravada's flagship Wind Mountain property is a past-produced and open-pit heap-leach mining operation. Wind Mountain property is located in Nevada, and the project has a preliminary economic assessment from 2022. The company says that Wind Mountain ticks a lot of boxes: low strip ratio, attractive metallurgy, good infrastructure, and great jurisdiction. Paul, welcome to Mining Stock Daily.
Well, it's a real pleasure to be back here. As you know, I've spent a year out of the CEO seat, director of a number of companies and a number of great companies, but I'm pretty excited to be back in the CEO seat with an absolutely tremendous opportunity here with Bravada Gold.
The name says it. It's a bit of a change from what you were doing in the past. Talk about Bravada. What's the opportunity that you saw?
Sure. Yeah. I mean, so, sort of interesting, as your listeners probably know, Western Copper and Gold, great project, but, large, high CapEx copper project, certainly, a bit of a longer timeline in terms of getting through the regulatory process. So when I was looking, and a number of opportunities were presented to me, I was really looking for something, something different, something that I could really sink my teeth into. So you're looking at Bravada and the Wind Mountain project, which is the flagship project. This is a brownfield project located in Nevada, just for those of you that know Nevada, near Gerlach, so north of about a little under 2 hours north of Reno. Operated by Kinross, operated by Amex, which was bought by Kinross, shut down in 1999, bounced around a little bit, and then ended up in Bravada. And Bravada, didn't do much with it. They were much more an exploration company. They acquired a number of assets in Nevada, and the Bravada, they did the PEA in 2022, which we'll talk a bit about. But, really, it wasn't sort of a key focus. And in terms of me getting involved, it's sort of an interesting story. There's a couple of big investors and bankers in Vancouver that I knew, and they were like, Paul, we'd love for you to come in and run Bravada. And I looked at the asset, and I was like, at Wind Mountain, I was like, a little small. It's not really my thing. And they said, well, no, come in, let's sit down with us. I'll walk you through it. And they sort of walked me through, you're missing the picture here. And it's a little bit about strip ratio. It's a little bit about, the new resource that came out in 2025 that hasn't been incorporated in the PEA yet. And, the light bulb went off. And so, I joined. I mean, this is, it's 2 weeks and 1 day into the new job. But I've already been to site, already met with the engineering group, and I'm really excited about it.
Let's talk about that resource first as part of the light bulb going off. There was a real change between 2022 and how you're actually pricing this out, what you have in tailings, and then also kind of a big resource jump. What's happened? Is that just a matter of metal prices, or has there been some other types of inclusion in terms of drilling and exploration?
Yeah, so it's a bit of both. So they did do drilling in 2024 and 2025 before I joined, and came up with the new resource. And so the current resource is sitting at 51 million metric tons at a grade of 0.34, gold, 8.6 grams per ton, silver. So that gives you a little bit over 500,000 ounces of gold and 14 million ounces of silver, and that's in the indicated category. So that is a great resource. And you look at the resource that was used in the PEA that came out in 2022, and it's actually about half of that overall resource. So, certainly excited about bringing this new resource in. And part of it is cutoff grade, but I mean, that resource that we're talking about with the 51 million tons was done at $2,400 US dollars per ounce of gold. So we'll talk a bit about this new PEA that we're coming out with in Q3. The new PEA that's coming out in Q3 will use an even higher resource cutoff grade, obviously. I mean, $2,400 an ounce is very, very conservative. And so I expect to see that resource increase again from where it is right now.
Now, the company did talk about a PFS that it was kind of working towards, but you did say in June 2026 that it was important to get out that PA, and a couple of the reasons that you're giving was regulatory environment, metal prices, and other factors. What do you want to get into that PA, Paul?
Yeah, I mean, keep in mind that I joined 2 weeks ago, so a lot of this work was already underway. And when I joined and I sat down with the team, they said, look, we can really move forward the regulatory work here if we get the PEA out right now. Because one of the things, because it's a larger resource, it's going to be a larger heap leach. So the heap leach pad is going to move. And they're looking at and reprocessing some of the old waste dumps from the mining that was done by Amex back in the 90s. And so that material is going to go, actually some of that material is going to go into becoming a resource, and that's going to go on the heap as well. So they said, look, we need to at least get the layout of everything so that we can begin to move forward on the regulatory work to move this forward to be fully permitted. And the fastest way to do that is just to knock out a PEA here right away. And so, I mean, that's one of the reasons. I mean, I'll be honest. The other reason is that just the gold prices moved so much. And so we're talking about a PEA, and we'll get into a bit more of the details from 2022 that used a $1,750 an ounce gold price. Well, I mean, as you know, gold today is $4,500 an ounce. So, I mean, it's just so dated. It doesn't really, allow investors to have an accurate look at this project.
Talk about the other pieces as well, too. You said that it was important to have it into this regulatory environment.
Yeah, I mean, I've been brought in here with a pretty clear goal, and that is to bring Wind Mountain forward to become a mine. And so it's part of that is knock out this PEA and then move it quite quickly into a PFS and then a full feasibility study. And then the other thing is to move forward on the permitting. So we brought on, there was already a couple really well-qualified people on the permitting team that was working on it. But, I'm lining up right now budgets and schedules from them, and, essentially saying, let's move this forward as quickly as possible. And so, yeah, like I said, I'm getting this PEA out right now, getting the footprint and, what you're going to disturb clearly outlined. So then you can go in, you can do your archaeology studies, you can, it lays out where you're going to do your geotech, et cetera, et cetera. So that's all the bits and pieces that you're going to need to do in order to get through your EA or EIS in Nevada.
We were talking before we came on, and I think you've been kind of emphasizing this point as you've gone through. It's a mostly straightforward project as you advance this. What, though, are you looking out right now that you've kind of got to, wrap your hands about? What is your kind of top de-risking projects, priorities that you look ahead for wind?
Yeah, I mean, one of the things I just want to make really, really clear. I mean, if you look, when this PEA came out in 2022, the project had a IRR of 38%. And a after-tax NPV 5% in Canadian dollars is $66 million. That is at $1,750 per ounce of gold. The cash costs on this were $1,045 an ounce US. So, and that again is with this small resource. So you put today's commodity price environment plus that additional drilling into the current resource. Plus, you put in the fact that you have a waste dumps that were not included in the 2022 PEA. So the waste dumps are all ore now because they were waste in 1999. Today those are ore. So those are also going to go onto the heap leach. And so when you put all of that together, this project is a significant project. It goes from being this little sort of, very small little project into something that is, a great starter gold mine for a company. And so that is really what's got me most excited. And that just, I mean, you can look at this, you don't even need to be that sophisticated investor and say, whoa, if I got $1,000, a little over $1,000 an ounce cash cost, and I'm using $4,000 gold, and I'm making 50,000 ounces of gold a year, that's a lot of money that's going to increase from 1,075 when I move the base case, or when I move to the economics from using 1,075, or sorry, 1,750 to $4,000 gold. It's just going to be all profit. So that's, we're all going to see this in the updated PEA. That updated PEA, I'm saying Q3 because I've worked with engineering groups before, but I'm thinking that that's actually hopefully going to be in July, sometime mid-July or early August at the latest. And so, that is just, low-hanging fruit. Then there's some really interesting upsides. So one of the things is, as I said, there's quite a significant silver resource here. And the silver recovery right now is only 15%. And as you know, I mean, I've got a doctorate in metallurgy. So I mean, of course, my spidey sense goes off when I see that and say and the gold recovery is in the 60s. So there's a big opportunity there on the silver. And so I think that, we can do some things on the silver. We'll do that after we knock out this PEA and as we work towards the pre-feasibility.
Permitting, how does that look right now, Paul?
I'm just getting, I'm just getting my handle on that. And obviously Nevada is a new jurisdiction for me, but there's a number of things going in our favor. So first of all, brownfield site. Okay, so this is a site that is already, already had a permitted mine. It's actually one of the few mines that has fully successfully been reclaimed. Bond has been returned back. So what that does is it tells you about the ease of mining, the ease of permitting. You're not producing any, acid rock drainage. It's very simplistic. You're above the water table. All those sort of things make it fairly straightforward. And so, one thing that I have learned about Nevada is that there's sort of two routes. There's the EA and the EIS. So there's the environmental assessment or the environmental impact study route. And if you can go the EA route, it saves you a significant amount of time. Now, we think that there's a really good chance. I've had one meeting with our permitting team here so far. They think there's a very good chance that we can push this through on an EA. We're going to plan for an EIS, but we think there's a really good chance that we can move through on an EA that would significantly, lessen the amount of time and the amount of money that we would spend here. The other thing is, of course, is that, with the Trump administration in the U.S., there's a real push here to move projects forward, good projects, simple projects like this, and, not have the regulators sit in the way. So, that's the other thing I heard talking to my permitting team. So this seems in terms of gold projects right now at the development stage, one of the best projects in terms of the permitting outlook moving forward.
What's your cash position, and do you need to raise?
So small company, so small bills. We're sitting in on about $1.7 million. And looking through the financials, there's a pretty good chunk of warrants that come due that are all in the money here, that come due near the end of the year. That'll add in a little under, an additional, not quite $1 million, a little under $1 million. But we've got a pretty low overhead right now. We're going to update this PEA. and really we're going to use this updated PEA to put together a budget moving forward. And so, I mean, the environmental work should be straightforward. The met work, we're going to have to do some more met work. Like I said, I really want to get on top of that silver recovery. There'll be geotech and environmental stuff, and that I know all adds up. But again, small site, simple site, Nevada. This isn't really heavy lifting. So, you're junior money. You're always burning through money, and you're always planning on the next raise at some point in time. But there's no gun to our head, which is the important thing. And I mean, I certainly one of the key things when I joined this is I was like, this isn't a company where it's already bleeding to death. And it was like, no, they raised some money in January. This is when they brought in some of these key investors that brought me in. The plan is to really refresh the company. I'm sort of one of the first steps. There's a new board member, a guy by the name of Adam Melnick, that came in this year as well. So lots of corporate changes as well as we move forward.
Now, wind is within 8 Nevada properties that are underneath Bravada. Can you talk about the remaining assets? How are you viewing them right now vis-a-vis your flagship, which is wind?
Yeah, I mean, I've had a preliminary look at the other assets, and they're all very exciting exploration assets. And as I said, there's it's a group of there's a strong group of geologists that are part of the company, and they're all very, very excited by it. And I'm excited about it because I look at, how I like to move this forward. We get this PEA out, like I said, hopefully, the last I'm hearing from the engineers, they're saying it should be here mid-July, but let's say mid-end July. Start the work onto the PFS, but and then there's some great exploration potential at Wind Mountain, and so we're certainly going to do that as well. But then, you're doing PFS, you're doing permitting. It's not necessarily super exciting news flow at that point in time, but that's when, we've got these other properties. They're all, really exciting. The guys, the geos, they're just chomping at the bit. So I'm holding them back at this point in time, saying, look, I know those are exciting, but let's get Wind Mountain going. Let's get it, moving forward, moving on the regulatory front, moving on the engineering front, and then we can go back and focus on those. And yeah, I mean, the first review of them is that they all look really, really good. I'm going to sit down. We'll just go through them. We're going to prioritize what we think has the highest level of probability and go in and do some drilling. But that's probably going to be a 2027 activity. We've got a bit of drilling planned for this year on Wind Mountain, but the other properties will be 2027.
Paul Lascelles, thanks to speak with Mining Stock Daily.
It's always a pleasure to talk to you guys. And yeah, I mean, this is a great, simple story, and I'm super excited about it.
The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.